dun. Good morning, America. Good morning, America. America. What's going on, peoples? How y'all doing? What's good in the head? Awesome, man. We got a lot of stuff to do today. You know? Alright. So, guys, we have, a slight weak open on the market, about 1%. We had a huge dump the last couple days, and then, we ended up bouncing off the 20 SMA. And we got a nice push midday in the markets. Now, with this gap down, it's going to kind of make things a little bit more tricky. Why? Because we're stuck in between the high from a couple days ago and yesterday's low. When you're stuck in between two big ranges, things can act a little bit choppy. So today, you're going to get a little bit of two things. You're going to have probably some up and down today. Hey, J-Lo, how you doing, brother? You're going to have a little bit of up and down today because you're stuck inside that range, and that's going to make things a little bit tricky. Obviously, with the market gapping down 1%, we had that big push end of day. We have to be careful to not be too aggressively short at the open. There's a shot that the market itself goes red to green as it bounced off yesterday. Now, yesterday just bounced right off that 20 SMA. So, what happens today? We have to be prepared for either way. Either we go red to green, but if the market hangs out, like say it does a little pop into the 9 EMA and starts to roll over, then we're going to have to look for a potential short. So you're going to have to today be ready to go both ways. You're going to have to be ready to go both ways. We don't necessarily know. We know that there was a huge bounce yesterday, but there was also a huge flush yesterday. So now when you're in that range, right, you're basically in the backseat of your buddy's Volkswagen. It makes things a little bit more tricky. So what we got to do is prepared to be long and short today. Now the trend has definitely been higher, obviously, in the market. We'll see which way these things go, all right? Now let's take a look at some of the earnings plays. This TGI's got some news out. In general, a lot of these defense companies are coming right off bottoms. Like this is a good looking breakout over here. If it sustains its volume, I think this one can hold. It's up 24%. So, you got to wait for a pullback at the open on this bad boy. But this thing is pretty hot. DLTR. DLTR's got a nice move. It's only 200 million share float. So even though it's a retail stock, it should move okay. Like, I would probably keep this on the list. Like, I got a bad relationship with DLTR, but that one looks pretty good. Toll Brothers got earnings out. Toll Brothers climbs 9% in late trade after fiscal 2 results. This is another one. You're remounting the 200 SMA. Like, that one looks pretty good. Now, home builders suck to trade. Like, over the years... Hey, Dippin', how you doing? Over the years, one thing we've noticed, home builders stink to trade. So probably not something I want to put on my watch list. SPR. Man, this thing is hot. So SPR is a supplier to essentially Boeing. So if Boeing keeps going, this one's got tons of room to go. Like you can see this thing used to be $110. You're at 26 bucks here. Like they're... What the fuck? Hold on here. Dun, dun. Sorry about that. I don't know why Ameritrade keeps sending me these authentications. It's like somebody hacking into my account. Hold on here one sec. Back at it. Market data will not update. Ameritrade is so weird like that, huh? Alright, let's take a look. Ooh. Add this SPR to the list. The thing with SPR is it's only gonna move with Boeing. So if Boeing starts to go, SPR will go. Boeing is on the gapper list too. The key with Boeing is gonna be you've got to let it pull back. So it's up 5%, right? They've got some news out that they resume production on their Boeing Max. Boeing is a higher float stock, 560 million. If it pulls, we can look to potentially play. But we cannot play Boeing on breakouts. Boeing is like notorious for failed breakouts because of the float. So what you want to do on this bad boy, it's got the news out. It's nice that they're kind of, right, resuming production of their plane that crashes and kills people. But you can't chase it up. You can't ever chase Boeing up. So let's wait for this one to pull back. Once it pulls back, we're good to go. Does that make sense? Why? Because the float is high. On high float stocks, you always want to be rolling in on pullback. So let's watch this one. 9 EMA, 20 EMA. Let it start to hold. Let's see where it builds. Once it does that, you're good to go. Make sense? Good. Yo, this NBR is on the gapper list. I think today could be an exhaustion gap. This thing was 11 bucks. If this thing busts, like one push out of the gate on this one, man, like this thing is going to be, to me, this thing looks like a short. Like it's what we'd call a rubber band short. So when you have a stock, like this is the 15-minute chart, when you have a stock that just goes bonkers like this, like that is like your quintessential rubber band short, meaning that it's getting so extended. So you're $10 away from your 9 EMA. When you're $10 away from your 9 EMA, you're getting so long in the tooth. I always say it like this. If you put two thumbs between the price of the stock and the 9 EMA, you've got something that's good to go, right? So what you want to be doing is wait. At some point, this is going to give us an epic fade. Possibly back down into the 9 EMA. So I think this gap today on it, it's up 5%. This could be an exhaustion gap. Let's see how it reacts. But I think that this one is a potential that we could fade. What I mean by exhaustion gap is that it's like kind of like we took that short and save yesterday, right? See like how save like gapped up big. It gapped up 2 points. So like as soon as it opened and it broke under the first candle, we shorted it, and you got like a nice flush, and then it popped back into VWAP and it flushed back down. That's like this is the similar type of move we want to see on potentially NBR. I like the look on this one for a potential exhaustion gap. That's how you want to take this thing down. It looks pretty good. What do you guys think? Cool. Hey, Scotty, what's up, baby? Good. So let's add some of these. WD had earnings out today too. Tech is the right sector to be in after this market crash. WD's got earnings out. It's got also 1, 2, 3, 4, 5, 6, 7, 8. When you get earnings out and you get like 10 analytics upgrades, usually that can add like a lot of good juice to a particular stock. WD's a large cap stock. It's a $40 billion stock. But the float on it is pretty low actually. It moves with some pretty good range. So like it's in the right sector. It's got the right float. The issue on it at the open is going to be spread, but once that spread tightens up, like this is going to be top of the watch list for us. I like the look on this one also. Good. What do we got on the downside? Iova. It's an offering. That's no good. Arna, boom, boom, boom. That's an offering too. So guys, when you get like a gap down on a stock, hey Bobby, how you doing? When you get a gap down on a stock and it's an offering, it's not the same as like if it had bad earnings. When you're looking at like gappers, like if you have bad earnings on a stock, that's one thing, right? But like an offering is a dilution. So a lot of it is already priced in depending on where the offering is. So that's not like, they can be played, but it's not like your bread and butter, I would say. Loss widens, revenue rises. So like this one had earnings miss out today, but like see how it's just like kind of gapping down into support here? That's not my ideal type of play. Like when you see something like that, like because it's just gapping down into support, like I don't think that's anything. Now, social media companies are going to be in place. So I would add these to the list. They are not necessarily the easiest traders, but like yesterday, I think the Trumpster announced like there's going to be some new rules for social media companies. So you're starting to see a little bit of pull in these things. I don't know what kind of rules they get put in for that, but Twitter and Facebook, see the big gap downs on this? These are in play today. You know, if you're going to get like a presidential order that these guys have to mind their own business, that threat, I mean, I don't know what he can do, but the threat is there, and that's going to put some pressure on these stocks. Okay, I'm the president, and today I'm going to tell the people at Facebook to fuck off, right? If he tells people to fuck off, I mean, that can put some pressure on the stock, especially on Facebook, which is so extended, right? This thing was $130, not to 240, so it's almost up a double since the lows of March. This could be in play. Watch how it reacts today. Watch how Facebook reacts around that 221. If it busts below, like this is a trade we may take right off at the gate. All right, this is a trade that we may take off at the gate. Now, Facebook's a thick little noodle. It's a 2 billion share flow. So you don't necessarily get like that. You don't get like that huge push on them sometimes. But the range was good yesterday. The range was good on it yesterday. I think that definitely Facebook under 221 looks good. Twitter, now Twitter's a tough trader. Anybody ever trade Twitter? Never had any good luck trading Twitter. It's got a gap down too. You can put this on the list. It does not trade as well as Bookface. Bookface is just a little bit easier to trade. I don't know why. Twitter's just Algo City a lot of times. So I would add those though. They're going to be in play today. Hey, Bobby, what's up, baby? All right, so let's talk about like just a regular watch. So we're down 0.76% today. All right, we're down 0.76% today. Good. You see all like, you know, when you have like a little bit of red on the screen, it's actually, I mean, that's like really ideal. And the reason for that is like in a long-only market, a gap down, even a small one, gives you the opportunities to go red to green. So for today, like we want to be really watching this thing, like just like yesterday, right? Yesterday, what was the big play? You know, the market gap down, and then the market gap down, and then everything ripped, right? The market gap down, and then everything ripped. I like that kind of action. I think that, you know, that's going to be the play again. Like, we're going to try to red to green this thing. Fave for today, J-Nub. Fave for today. On any pullback, let's watch this thing at the open. 9 EMA, 20 EMA. Let's watch this thing at the open. If it starts to hold, the ripstick on this was 10 points yesterday. Guys, even if you have a small account, if a stock can rip 10 points, even if you have 100 shares that you're trading back and forth, you can shred. You can shred very nicely. This thing has some amazing range, and this is like a classic pullback. So see how you got a flat top breakout here? So you break out the 110, you pull back about 20 points right into the breakout spot and the 20 SMA. Like, that's a bread and butter Like that's a bread and butter go-to right there. Like we gotta be in this. Hopefully this thing does not book right off at the gate. It pulls back a good amount, and we can get long on this thing. I won't chase this thing up. One thing about JNUG, and write this down, these gold ETFs, anytime you buy them at breakout, they do not work well. Like you gotta almost get them always on pulls, and then once the trend sets, you want to kind of layer into this thing because the range on it is hot. Remember, even if you got a small account, if you can only trade 50 shares of something, if you could trade 50 shares of something, but it moves around 10 points, you're in the go on this. You guys like it? Cool. Number 2 on the list. SPLK's got a nice kind of 3-day consolidation after its earnings pop. The 9 EMA's catching up on this thing. I like this one for a potential move also. This PDD had a big pop on earnings. Now it's sitting there back on support. These Chinese stocks been weak lately, but usually this is how things work. If you a nice 3-day pullback into support is almost always bought up. So I'm looking for just like one quick flush at the open, a tap into the 20 SMA, and then we're going to try to get long this thing if the intraday setup works. For anybody that's just brand new to day trading, you can have the best chart in the world, but you have to align it. Meaning you have to have an idea on the big picture, and then you align it with an intraday pattern. It's called aligning on multiple time frames. Any trade you take has to be aligned on multiple time frames, meaning you have to have a pattern on the daily, a pattern on your intraday, and usually you're looking maybe even at some intermediate term pattern also. This thing is hot. Now, it may be $60 stock, but the range on this of lately has been like 5, 6, 7 points. You can see even yesterday you had like nice range on it. I think you're going to get this thing cooking. This GAN is like the same sector as I think Donkey Kong. Not Donkey Kong, but we just call Donkey Kong. DraftKings has been like red hot of late. So this GAN may follow. And this is an IPO too. So keep this on watch today. It's gapping up like 13%. It's internet gaming. DraftKings is going wild. So if this DraftKings keeps going, this GAN is going to be hot. So I would keep this on the list too. Good. So that's our list. I'm sticking to it. What do you guys think? BYD for bounce. Yeah, BYD. I got BYD on the list too, but the chart is starting to break down, so not that hot. This VTIQ is beautiful. Like this is one of the best charts in the market. Twilio, junk. SpaceNet, junk. Good. Yes, D-Dog I got on the list too. If it gets down to about 60, I'm looking for a potential buy. You've got a gap fill at 57. I like this one. One more push down. Either at 60 or 57, this thing's going to be a buy. It's not ready just yet, though. Like, it's got some more work to do. Like, this is a little bit of a rollover here. You got to come back into some big support. When you get a stock that's really extended, remember this thing used to be 30 bucks, right? So if it moves to 75, it's got to pull back sometimes. So you're starting to pull back on this, but you got to come and layer it at some level of support. When you get that, and then you couple that with some type of intraday pattern, that's when you get that super move. Does that make sense? Cool. That's our list. NK, not really. Not my cup of tea. Yeah, I think WDay is going to be the fave for today. TGI is going to move pretty good. We got SPR. Boeing only on pullbacks. Bookface, if it breaks only under 221. And then we got this GAN to follow the DraftKings. I think, and then JNUG, SPLK. That's our list. I'm sticking to it. Anybody got any questions? Everybody ready to shred? Man, yesterday was so hot. This market is giving us gift after gift after gift. What you got to just do is bide your time, see which way the market wants to go, and then you shred it. Cool. All right, man, let's make it happen today. Yesterday was hot, but let's make today a little bit better if we can. I think we got to be prepared for that red to green. Now, the thing is, the market was down about 1%. Now it's like already made half a comeback here, so we got to just be a little bit careful. Got to be a little bit careful. You can trade the TQQ ETF too. Sometimes if you see like the market really pushing, you can trade the actual ETF of, the market. Just do a 3x ETF so you get a little bit more range. So TQQ is the 3x ETF for the NASDAQ. It moves actually pretty good. Like, if you see, like, it moves pretty clean. Like yesterday, it flushed at the open. It had a $6 range, and then it had a $6 bounce. So it had 12 points of total range. That's pretty good. So, like, even if you're trading in 100, 200, 300 shares, whatever it might be, according to your account size, if you got 6-point range to the upside and downside, like, that's very tradable. So those are pretty good. So definitely keep those on the list. That's my list. I'm sticking to it. And you. Let me see.